Welcome to the Deep Dive, where we sift through the noise, pull apart the data, and really zero in on the insights that matter. In today's business world, things are incredibly complex. No company's an island, right? Every single organization is tied into this huge, intricate web of suppliers, partners, vendors, you name it. And while these connections are vital, absolutely essential for getting things done, they also open the door to a unique set of vulnerabilities. Okay, let's unpack this. Today, we're diving deep into the third-party risk management market. You'll hear it called TPRM. And this isn't just, checking the box on a new vendor once. No, it's about a constant, proactive way of understanding and mitigating the risk from every external link a company depends on. Our source for this deep dive is a really comprehensive outlook from Cognitive Market Research. It uses actual data from 2021 through 2025 and then projects things way out to 2033. So, our mission, pull out the key nuggets from this report, give you a clear, actionable picture of this absolutely booming sector.
What's fascinating here, and you asked why it's so critical right now, well, it's the sheer speed of digital transformation, isn't it? And the sophistication of cyber threats just keeps climbing. Businesses, they're not just worried about their own walls anymore. Their attack surface, it's exploded. It includes every single third party with any kind of access, and it goes beyond cyber, too. We're talking major concerns about supply chains, data privacy rules, even things like geopolitical risks or ESG factors. Companies get it now. Managing these external risks isn't just compliance anymore. It's strategic. It's about resilience, protecting your reputation. Frankly, it's about staying competitive. It's a real shift from being reactive to building sort of a continuous intelligence capability.
A continuous intelligence capability. I like that. And when we talk about growth, this market isn't just growing, it's exploding.
Yeah.
Let's get a handle on the scale here. The report shows back in 2021, the global TPRM market was already worth a substantial $5,542.9 million. That's over $5.5 billion. Already pretty big, right?
But then, fast forward just a few years to 2025, and it's projected to hit $9,932.78 million, almost $10 billion. Now, here's where it gets really interesting.
Yeah.
By 2033, the forecast is, it's expected to soar to a staggering $31,896.1 million.
Wow.
Yeah. Think about that jump from about $5.5 billion to $32 billion in just over a decade. And underpinning this, what the report calls a strong compound annual growth rate of 15.7%. That's CAGR, the compound annual growth rate. It basically tells us the average yearly growth, smoothed out. It shows real, consistent momentum. This isn't just growth. It's like the market strapped to a rocket.
It really is. And if we connect this to the bigger picture, these numbers aren't just numbers on a page. They signal a fundamental, massive shift in how businesses see risk globally. This kind of growth, it highlights just how interconnected everything is now: global supply chains, digital systems. It directly reflects what the report calls the rising importance of risk management practices worldwide. Basically, businesses have woken up. They realize their perimeter, their security. It extends way beyond their own building. It includes every single third party they work with. It's not really optional anymore. It's becoming essential for, survival, maintaining trust, and honestly, getting ahead in this complex world. The money flowing in, the investment we're seeing, it's proof of that understanding.
Absolutely. So the global view is crystal clear. Massive, accelerating growth. But where is this felt most? What are the regional stories? Let's shift focus now from the global picture to North America and Europe. You might think of these as mature markets, but actually the growth story has some fascinating twists. Okay, starting with North America. Back in 2021, it was worth $1,391.27 million. Significant chunk, and it's projected to hit an impressive $7,688.1 million by 2033. That's keeping a healthy 15.407% CAGR. Now, no surprise, the United States holds the lion's share, right? Projections show it reaching $5,259.88 million by 2033.
The biggest piece.
But it's not just the U.S. Look at Canada, really strong expansion there, too. Expected to hit $1,804.05 million by 2033. That's with a 16.187% CAGR. And here's a really interesting bit. Mexico actually shows an even higher growth rate within North America, 16.65% CAGR, projecting $624.18 million by 2033. So even within a continent we think of as established, you see these pockets of faster adoption.
Yeah, that sustained growth, even acceleration in a place like North America is really telling. It's driven by, a mix of powerful factors. You've got increasing regulation, definitely. Things like data privacy rules, California's CCPA, for instance, and rules around protecting critical infrastructure that demands serious vendor oversight. Plus, just the sheer complexity of highly digital businesses, where cloud providers manage services, they handle core stuff. It means third-party risk is now a boardroom topic. Businesses there aren't just cleaning up messes. They're actively investing in advanced TPRM tools, using automation, AI, things that continuously monitor their whole ecosystem. Like we said, it's not just ticking a box, it's about protecting the brand, preventing costly disruption.
That's a great point about the dissolving perimeter. And speaking of crossing boundaries, let's hop across the Atlantic to Europe. Europe also has a really significant slice of the TPRM pie. It grew from $1,108.58 million in 2021, and it's set to surge to $6,164.17 million by 2033. Strong CGR there too, 15.46%. Key players. The UK shows, quote, impressive momentum, 16.455% CAGR, reaching over a billion, 1,077.28 million by 2033. Germany's right alongside 16.001% CAGR, projected to hit nearly $1.5 billion, specifically 1,476.78 million by 2033.
Strong numbers.
Very strong. But here's something that really caught my eye in the report, a surprising fact. The category labeled Rest of Europe, which kind of bundles together various smaller European markets. It shows one of the highest growth rates anywhere. It's accelerating at an exceptional TDR of 19.004%, climbing to 260.301 million by 2033. That's a huge signal. What do you think is fueling that, especially in those smaller pockets?
That dynamic growth across Europe, and yeah, especially that surge in the rest of Europe, it really speaks volumes. It shows this demand for TPRM is continent-wide. A huge driver is the EU's regulatory landscape. It's tough, and it keeps evolving. Think GDPR, right? That impacts anyone handling EU data anywhere. But now you have newer things like NES2, DORA. These are pushing for even tighter risk management in critical sectors, including their third-party links. So for the rest of Europe, this might mean they're on a really fast adoption curve. Economies rapidly digitizing, plugging into the EU market, maybe with fewer old systems holding them back. It suggests everyone understands, robust TPRM isn't just for the big players. It's fundamental if you're operating in or even just connected to Europe.
That makes sense. So from these established but still dynamic regions, let's pivot to Asia Pacific, because here the TPRM growth story is, well, even more dramatic. This region really seems to be the global epicenter for rapid expansion in this market. Okay, the overall APAC market, it generated $1,876.99 million back in 2021, but it's expected to rocket to $11,071 million by 2033. That's an incredible 16.301% CAGR, over $11 billion.
Huge numbers.
Huge. Leading the pack is China, projected to hit $3,509.5 million by 2033 with a 16.476% CAGR. But let's zoom in on India. We see one of the highest growth rates globally there, a remarkable 17.267% CAGR, reaching $1,606.54 million by 2033. And for the strongest performance regionally, the report points to Taiwan, fueled by a 17.326% CAGR, climbing to $653.188 million by 2033. That's just serious acceleration everywhere you look there.
This really raises an important question, doesn't it? What specific dynamics, what regulations in Asia Pacific are driving this kind of explosive demand? We're talking about economies that aren't just digitizing fast. They're at the absolute heart of global manufacturing, supply chains, and increasingly digital services, too. In China, for example, just the scale of e-commerce, the digital infrastructure, plus their own specific cybersecurity laws. It forces companies into needing really sophisticated third-party oversight. India, it's a global hub for IT services, outsourcing. So it's facing massive pressure from international clients demanding top-notch third-party risk controls. That's driving that amazing growth. And Taiwan, being so central to critical tech supply chains, well, the demand for security and resilience there is intense. Add in geopolitical factors, and it makes sense. It's not just about playing catch-up. It's about building future-ready business ecosystems while under intense global focus and competition.
Future-ready ecosystems, great way to put it. Okay, let's broaden out again and explore the developing markets, places showing really strong potential and promising expansion. South America, the Middle East, and Africa. These regions are definitely becoming more important players. Let's start with South America. The overall growth path goes from $443.432 million in 2021 to a projected $2,443.03 million by 2033. That's a solid 15.286% CAGR. Brazil's the biggest contributor there, set to hit $927.943 million by 2033. And worth watching is Colombia, showing notable growth at 15.861% CAGR.
Consistent growth.
Now shift to the Middle East. Here we see really impressive growth from $399.89 million in 2021 up to $2,519.79 million by 2033. That's a strong 16.525% CAGR overall. Saudi Arabia really stands out, 16.992%, expanding to $412.876 million. These are really eye-opening figures for the Middle East. Suggests rapid modernization efforts are including this aspect.
And finally, Africa, showing robust potential.
growing from $393.546 million in 2021 to over $2 billion, 2010.02 million by 2033. Countries like Nigeria, South Africa, they're significant contributors here, reflecting the continent's economic development and, increasing connection to global business and digital trends.
The rapid uptake of TPRM in such diverse developing regions, it tells a really powerful story. It's about the true globalization of risk. It shows this universal, almost foundational need for strong TPRM frameworks everywhere. As these economies grow, diversify, engage more globally, they naturally attract more international business, right? And they develop more complex local business networks, too. All of this demands a more proactive, sophisticated way to manage risk. Look at the Middle East, huge infrastructure projects, effort to diversify beyond oil. That creates whole new interconnected industries needing strict third-party checks. In South America, Africa, think about the boom in digital services, mobile connectivity. Companies are forming new kinds of partnerships constantly, all need risk evaluation. It's a clear sign that protecting against third-party issues is becoming, well, non-negotiable. It doesn't matter where you are in the world. It's a shift from maybe older practices to global best practices.
Wow. What an incredible tour through these numbers and the forces driving them. It's been quite the deep dive. So let's try and bring it together. What does this all actually mean for you listening? Whether you're leading a business through this, or you're an investor scouting opportunities, or just fascinated by global commerce. It means the global third-party risk management market isn't just growing. It's on a clear, accelerating path, driven by strong adoption, increasing sophistication everywhere. This isn't some niche anymore. It's becoming a fundamental part of modern business. It enables resilience, secure growth.
Exactly, to synthesize that narrative. North America, Europe, still vital, mature markets, but still growing robustly, driven by regulation, digital complexity. Asia Pacific. It's really leading the charge in pure expansion terms, at some of the highest growth rates anywhere, thanks to its role in global supply chains, digital economies, and crucially, the Middle East, Africa, South America, they're emerging fast, showing really promising expansion. It underlines how global and fundamental this shift is, this widespread adoption. It reflects a permanent change in how businesses operate globally. It reaffirms TPRM's strategic importance across industries. It's moved from being seen as a cost to being a critical strategic enabler.
And just to hammer home the scale again, remember that projection, exceeding $31.8 billion globally by 2033. That's a powerful shield businesses are building. So as we wrap up, here's a thought to leave you with. Companies are getting even more interconnected, right? Weaving these incredibly complex webs of partnerships, adopting new tech like AI. What new kinds of third-party risks do you think might pop up in the next decade? Could it be AI-related risks? Maybe even more subtle geopolitical issues tangled in supply chains? And how will this rapidly growing market adapt its solutions? Maybe more predictive analytics. Real-time intelligence. How will it stay ahead of those future challenges? Something to chew on. Definitely. Thank you for joining us on this deep dive into the third-party risk management market. Remember, all the data and insights we talked about today come exclusively from Cognitive Market Research. We'll catch you next time for another deep dive.